Core Scientific is changing its capital setup, and that can reshape how the market prices risk. The headline amount gets attention first, but the structure behind it decides whether the move is actually durable. Core Scientific CORZ is the search phrase that fits this story because Core Scientific's stock jumped after it lined up another $3.3 billion in debt to fund its pivot from mining toward AI data center infrastructure. That matters for equity holders, product investors, or treasury managers because the structure behind the capital can be more important than the headline amount. The real problem is that headline capital looks bullish until the market studies cost, timing, and execution risk. Start with the mechanism. The company is using secured notes instead of new shares, which helps avoid dilution but increases leverage as the buildout gets larger. In plain English, the number in the headline matters because it changes how capital is raised, how exposure is accessed, or how investors judge risk. For investors, the simple translation is this: capital structure can either widen strategic options or lock a company into a narrower path. That is why a move like this can look exciting on the surface and still carry far more risk once you ask who is actually providing the liquidity, the capital, the legal cover, or the operational support. The context matters too. The notes mature in 2031, follow a $1 billion Morgan Stanley credit facility, and support 6 CoreWeave-leased AI sites tied to a 12-year revenue agreement. That backdrop is important because institutional stories usually need repeated confirmation, not one headline, to become durable. Repeated confirmation is how capital stories move from interesting to investable. For people searching Core Scientific CORZ, that bigger backdrop is useful because it explains why this story landed now instead of last month. But context is not the same thing as proof. Here is the split between what is firm and what still needs more evidence. Core Scientific's stock jumped after it lined up another $3.3 billion in debt to fund its pivot from mining toward AI data center infrastructure. The market still has to judge whether long-duration AI contracts will comfortably outgrow the debt load and execution risk. That is the line between a capital event that strengthens the story and one that merely postpones a harder question. Viewers can easily mistake a live headline, a chart move, or a product announcement for a complete answer when it may only be the first visible piece. So who feels this first? That matters for equity holders, product investors, or treasury managers because the structure behind the capital can be more important than the headline amount. In practical terms, the market is now being asked to price not only the headline event, but also the follow-through. Execution risk, adoption risk, liquidity quality, legal clarity, or recovery credibility, depending on how the next few sessions unfold. If the follow-through is weak, the market can turn from applauding the headline to questioning the burden that comes with it. That is where investors decide whether the structure strengthens the strategy or simply stretches the timeline. The next follow-through signal to watch is this: watch construction progress, lease economics, and how quickly AI revenue replaces the older mining story in investor models. For this video, the most useful close is a concrete one. Watch construction progress, lease economics, and how quickly AI revenue replaces the older mining story in investor models. If that signal appears, the story gets stronger. If it does not, the current read can fade quickly. The next clean read on Core Scientific CORZ is not a louder slogan. It is whether the next measurable step confirms the same pressure, demand, or trust signal that made this headline matter in the first place.